Hello guys, it's Max here from Daily Market Movements and welcome to another episode where today we're going to be analysing the S&P 500 followed by the Nasdaq100 and the Dow Jones30 on this final trading session of the week. Now just before I start today's video, I just want to quickly share with you all the fact that yesterday I shared my latest trading vlog. It's a story where I share with you all how it unfolded that I actually closed my largest trade ever, which was $146,000 profit. And what makes it really interesting is that I was actually on an airplane when this happened. So make sure you go onto my YouTube channel and click on this video under the trading vlog section. And I'm sure that you will all enjoy it as it was aimed to motivate you all. But let's get started with the markets. Let's have a look at the S&P 500. So going into this final trading session of the week, we currently find ourselves trading at 4,345. If we just draw a fib chart from the peak to trough of last year's bear market, as you can see, we recently broke above the 0.61 fib area. So that's an area where I do believe we will find support. If we were to break below that for whatever reason, then I think that we could potentially go and trigger a move down towards a 50-day EMA, which sits around 2.5% lower than where we currently find ourselves trading at this moment in time. The good news is that I don't believe that's going to happen. I actually look for support to be pretty much where we're trading at right now. If we go into a slightly smaller time frame, which is the 2-hour time frame, and we draw a trend line, as you can see, this is an area where we could potentially find support and then bounce back up to go and test the previous swing highs that we achieved earlier on last week, which sit around 4,443. This is something that I was saying at the start of this week when we were trading up here. I said that this week's going to be a week probably used for digestion. Of course, it was a shortened trading week, which means there was lower amounts of liquidity being traded in the market, and hence that results to lower volatility. And that's exactly what we've seen. We've just seen a very slow grind lower here, and we've now gone and tested an area which I think will become very interesting, and this is an area where I do believe bulls will step back into the market. If we just quickly go back onto the day chart and just see where we stalled out, this area, to many people will be like, we've kind of just stalled out at 4,442. There wasn't really much in terms of resistance at this area, but there actually was. If we just quickly get the fib chart and we do the peak to trough from the February to March lows, as you can see, this was the area where we had the 1.618 full extension here. And hence that's why we have found some sort of resistance. So as I see it at this moment in time, we currently find ourselves trading within this very tight range, which goes from 4,300 all the way up to 4,450-ish. But of course, on the 2-hour chart, we do have that minor area of support, which is the uptrend line. So if we were to break out of that uptrend on the 2-hour chart, then I think we are likely to go down towards 4,300. But either way, I do believe we will find support here and then, trade higher going into the end of the month of June, especially going into the midway point of next month. Then quickly moving over to the Nasdaq100, very similar to the S&P 500. This week is being used as a week to consolidate and to digest the recent gains. If we draw that fib chart, we've just smashed through all of these fib barriers of resistance over the past couple of months, starting with the 0.23, followed by the 0.38, 0.5, 0.618, and so on. So, this market's clearly in an uptrend. Many are arguing that we could potentially be within a new bull market. The reason being is because we're now more than 20% off those lows. 20% move from those October lows was actually occurred all the way back in March. So, this is very positive. And one thing that I really like here is that we've continued this move higher. It was only at the start of this week we had some data come in from the Bank of America, B of A, and they basically stated that there had been a record amount of money flowing into the market last week, and all that money was being directed into technology stocks. So that clearly shows you something, and that's that the smart money, the institutional investors, the hedge fund, the banks, they're all putting money to work in areas which have already worked very well so far this year. We haven't seen massive inflows in the likes of financials and energy names, which many thought we would. We've actually just seen the money directed and focused on parts of the market which have already worked very well. So that's very interesting to understand as well as we go into the second half of 2023. But Nasdaq100 going into next week, I think that we've kind of consolidated rather nicely here. We've done the job. The RSI has now moved from 78 all the way down to roughly 61, and this is an area where I do believe bulls will start to come back in, dip their toe in the market, and I think ultimately we do go break above the swing highs and go and hit the 0.7 86 fib area up at around 15,400. I like this market a lot. Then finally, moving over to the Dow Jones 30. The Dow Jones, slightly more complicated. We, initially formed this inverted head and shoulders pattern. We broke out of that neckline, which was very positive, and it looked that the market was going to go and hit a new year-to-date high, which would be up around 35,000. But unfortunately, we had that pullback. I wasn't too concerned there because this is a typical technical movement. When you break above an area of resistance and you go to a next target, you do typically go back to backtest it as a new area of support. And this has happened over the past couple of days. But as you can see on this chart very clearly, we have actually now broken back below that neckline. So I think it's highly likely that we go and trade down towards the 50-day EMA here on the daily chart, and hopefully that can be an area of support where we see a sharp reversal here towards the upside. I have been saying it for the past couple of weeks that if this market is to persist, we need to see a broadening out in the rally. We need to start to see participation from the financial stocks, from the energy names, more of the cyclical names as well, and that will really help the S&P 500 achieve higher prices. But overall, guys, I pretty much got this market correct this week. On Monday and Tuesday, of course, I come out and I said that I'm looking for a decline in all three major indices this week. It has happened. Hasn't been a massive decline, but for the Nasdaq100, we're down around 3%. Same here for the S&P 500. Off those swing highs, we have fallen roughly 2.5%, and I think that this is a buyable dip. So just to conclude, going into next trading week. Next week, of course, I definitely see this as a buyable dip, and I have been putting money to work this week. Guys, thank you very much for watching today's video. If any of you would like to join my free trading signal group, all you have to do is scan this QR code on your screen. It will take you to my website, dailymarketmovements.com, where you can sign up. It takes 10 seconds to get involved, and I look really forward to welcoming you all over onto my Telegram group chat. Don't forget, as well as the free trading signals, you will also receive daily market research, which will help you navigate through these markets, especially with the amounts of volatility that we've seen as of recent.